That's a good question. I wouldn't say they necessarily hate arbors and scalpers. I think it's worth bearing in mind what a spread betting firm tries to do, and it equates to, are you taking the other side of the client? Firms like to hedge their risk. They don't like to have risk that they can't actually go into the underlying market and trade against. So for a client who wants to trade in large size, maybe on Eurodollar, the spread betting firm likes to be able to go into the market and hedge themselves in Eurodollar. Now, arbors and scalpers typically are actually only in an asset for seconds. And so it doesn't give the spread betting firm the time to hedge their risk. So I wouldn't say they hate them as such. It's a way of trading that doesn't allow spread betting firms to cover their risk. And I feel that's why they're difficult. As opposed to, for example, maybe DMA CFDs. Well, with a DMA CFD, the client is actually trading on the underlying market, so the firm doesn't have to see whether it can trade the underlying. So scalpers and arbors are fine on a DMA CFD, but not on a spread bet.
But certain providers have spread so tight nowadays that they actually encourage clients to scalp them. And isn't scalping ultimately, in that respect, sort of a valid trade?
Absolutely, but I think you've just got to remember, as I say, that spread betting firms provide 8,000 products 24 hours a day, and they're giving a price that the client can trade against. I think it's only fair that they offer that price in good faith, that the client, if he does want to trade in that, allows the spread betting firm to manage their risk. So yes, spreads have massively come down, which means that scalping is more possible. But as I mentioned before, spread betting firms aren't, hoping to trade against the client. They're not looking to win when the client loses, and so they want to cover their risk. And scalping or arbing just doesn't allow the spread betting firm to cover their risk, and that's why it's less popular.
It's thought that individual shares are a bit of a nightmare for spread betting providers to offer and manage. Why?
Individual shares aren't necessarily a nightmare to manage, but I think it all depends on where the spread betting firm has come from or what its background was. And I remark that the Star platform is strong because it's multi-asset. And what I mean by that is actually the way that you offer foreign exchange is very different than the way that you offer equities. And I think many brokers, if they've got a background in foreign exchange, don't understand how equities trade. Likewise, if a broker's got an experience in equities, they don't necessarily understand how foreign exchange trades. The majority of brokers have a background in FX, and I think that's why it could be considered that equities are difficult to offer. But in reality, it's not. As long as your platform can understand corporate actions, it can understand dividends, and you've got a model that allows you to hedge your risk quickly and easily, then actually they're not that difficult to offer.